AMD, March 15th, OPEX. Perfect example of the three strike rule. 1, 2, 3. On an average trading day, the most you will see is 3 strikes. So look, we open right below 185. We'll call that the blue, right? It's so close. What happens? We go up 1, 2, 3 strikes to 192.50. And then this thing just chops at it the whole time. If you're trading this, which volume being so low at the open, crazy to see it run so hard. And it was actually running like faster than NVIDIA was at one point in time. Wild to see. But let's look at this. We move up a full strike in 11 minutes. What happens? You kind of get this chop right here. Market makers, they kill this bull who comes in above. Then they really crush this bear. So if you're trading this, this is the best one to take. I mean, let's go back. We're just looking at it happen, right? This is live. Okay, we're up 1 strike. Volume is low. I definitely don't want to get into anything right now. I see this. Okay, I don't want it. Am I interested in taking a bear? Not really. I say, why is that? Well, we want to take a bear if it's up 2 strikes, it's up 3 strikes. This is the open. And the open for AMD is always crazy. And this was no different. Look what happens. This is a great trade. It continues that earlier movement. Wouldn't take like a huge position here. But if we're looking at, I mean, this goes 157%. Because it continues that initial move. You just bounce right here of a 187.50 and go higher. If you take the second one, you know, this is 650. That's 600K in AMD, bullish flow. If you're taking this one here, knowing where volume is, 82.98%, you have to be aware that 3 is probably the max. How much does this go for? 55%, and that's all the way up to here. Good trade. You know, it's a good trade because if you get into it, right, you're mentally, you're operating like, hey, we are in plus territory up here. We are in positive territory. There's more risk that this thing is going to go down than keep going up. You know, you get it. You make some money. You do not lose on this trade. As soon as it fails to break 192.50 and go to 195, get out of it. So the rest of this time, after 1040, they just, oh, it's gonna go to 195, and they just kill everyone. They kill the puts, they kill the calls, they kill everyone. Look at that. 1030 going. They just crush everyone's hopes and dreams. And you're obviously not taking a bull up there. I mean, look at these things. Do not trade. Do not trade. Do not trade. Do not. Don't trade it. And we give you a recommendation here to trade because 3 strikes on low volume is crazy. Small position, larger than usual stop loss, holding for max gain. Don't think you would have held through here. I mean, unless you're really actually crazy. And if you did that, hats off to you. But when we look at what happens at the end, the very end, look, we're so high up, extremely high risk. You're late. Don't trade it. Do not trade. Do not trade. Do not trade. But once we get after the Robinhood close, you get a little bit of a nuke. And the wild thing is, you know, these go 255%. Again, volume is kind of going up here, 100%. This is extremely risky. But if you take the view that we're up 3 strikes, average volume, it's worth a flyer if you're looking at it. Now, if you're using the rig system like TradeLord God status, you're not even looking at this. But if you're in Discord, you're looking at the alerts as they come in, worth a shot. Fun money, YOLO money, lotto money, just for fun. I mean, this is not something that you want to put a large amount of capital into, because more often than not, it's going to get incinerated because we like to rip at the end of the session. Although on Fridays, we have been seeing a little bit of a sell-off. Coming back, recapping AMD, open at 185. We don't like this because we just moved up a lot, right? You know, PS is 828. Come down. The bear doesn't take it down. This is a good one to take. Continues that initial movement. And even here, you know, you're pushing for 192.50. You get it. And then as soon as that thing starts coming down, get out of it. Get out of it. And then the rest of the time, this is like so important. Probably the most important thing since the last most important thing. When it's chopping at a strike or bouncing between two strikes, right? I mean, look at this. It's from 1030 to 1300. It's just bouncing off 192.50. Do not have any hope that it's going to go higher. Every time you're like, oh, it's going to go to 195. Don't do it. Don't do it. You're just going to get bled out and you're probably going to get killed. But like more than that, mentally, you're going to be locked into this thing and just miss out on whatever comes next. So in the middle, if you're in a trade, don't like holding anything through the middle, and you're not making money, just get out of it. Take the small loss, take the small win, and just wait for the next thing. Because if you watch the other videos, at 1300, we basically bottomed, and there were great trades on SPY that went like 90%. But if you were locked into this at 192.50, you missed all of it. Because unless you're superhuman, you can only trade like one or two at a time. Even two at a time is very difficult. AMD, yeah, you could YOLO this at the end if you wanted to, but really, this one, and you're taking the money. You don't break 192.50. It doesn't go to 195. It doesn't go to 200. You get out of it. That's it. You're done. Just like that. Is it easy? Could you want more? Obviously. Could be way better, but that's pretty good considering volume was low. You got a winner. Nothing's better than winning, right?